There's a circuitous function here that leads to this optimism of price and just the microcosm of it helping push prices up. Does it lead to a commodity bull market, or is it a lift off the great commodity recession?
I would argue this is a structural bull market, and you played Dwight Anderson, talking about the type of tailwinds you have going on. You have structural underinvestment in supply, similar to what we had 20 years ago, but turbocharged because of COVID prices going negative and the fact that you have the ESG overlay on it. Second, you have policy-driven demand, redistributional policies, green CapEx, all of that fueling a structural upward shift in demand. And then the third one is you have that tailwind of a weak dollar that really creates inflationary feedback loop.
Is American big oil ready for your scenario?
Part of the reason why we're bullish from a supply perspective is they're not there. Looking at the Permian, the activities of the big super majors around the world have come off tremendously. There's an ESG component there, but there's also just, hey, returns weren't that great. So the bottom line, yes, there is definitely the makings here for a very strong bull market, and the interest in some of these companies, they may be, but they're moving forward in a very different direction.
So this is really important. I don't want you to take over David Kostin's shingle here, but bringing over the commodity perspective of Currie over to the equity market application of Kostin, can you advise David Kostin to be overweight energy even after the lift off the bottom?
We want to be overweight commodities. And the one thing that separates commodities from, financial assets is financial assets, they anticipate the future. Commodities are spot assets, and they pick up as a hedge against potential inflation, the unanticipated physical moves in the real economy. So as we think you're going to physically take off with the vaccination, improvement in economic activity in the second quarter, you're going to want to be long spot assets, real assets. So we much prefer, the commodity as opposed to the commodity-related equity.
Well, I just need to revisit this, Dr. Currie. One final question. If you look at the break in commodities off of '08 and the glide path that we've seen through a decade, to be clear here, you're calling for a reaffirmation of a commodity bull market.
Without question. And again, I want to emphasize, this ship has sailed. If you look at all the classic, telltale signs of a structural bull market, you have the weak dollar, grain prices. We didn't even talk about grain prices. I had a client call corn Bitcoin recently. And then you have what's going on in the metals markets. Overlay that, and the kicker is the global liquidity is beginning to rise because that's the oil to the machine that really starts that reflationary feedback loop.